Firstly, before I begin, I'd like to acknowledge the traditional owners of the land on which we meet today. I'm here in Canberra, in freezing cold Canberra, I should say, and it's the Ngunnawal people. And I pay my respect to elders past, present, and emerging. I would also like to extend that respect and acknowledgement to any Aboriginal and Torres Strait Islander people on the call today. My name is Jessica Evans, and I'm the Assistant Secretary of the Structural Adjustment Strategy Branch in the Department of Health. I'm joined today by a few panel members, both from the department and also from advisory firm Stewart Brown. My colleagues here today are Nikki Phelan, who is the Director of our Financial Monitoring and Engagement Program, and Kate Apps-Muir, who is the Director of the Transparency and Risk Profiling section here in the department. In addition, I'd like to welcome Grant Corduroy from Stewart Brown. Grant is the Senior Partner in Stewart Brown and has been working with the department to conduct the data cleansing around the labour costs and care minutes, which were reported for the first time as part of the aged care financial report. So this role will also be undertaken for the quarterly financial report. And as part of the work that Grant and his team have been doing, they've identified a number of common challenges or questions that came through. And so we're going to use this opportunity to provide some of the technical detail and clarify some of the questions that we hope that can make this year's submission of the quarterly financial report somewhat more straightforward and clarify some of the questions that providers may have. So once again, thank you all for joining us and for bearing with us with the new WebEx details. I hope people were able to join somewhat easily. As I said, we'd set a session up for 1,000 and we ended up with over 1,800 or around 1,800 participants. So wanted to extend that and make sure that people could participate. This webinar is the first of several sessions that will be convened by the department in the lead up to the introduction of the quarterly financial report, which will be introduced from next month. Over the past 6 months, the department and myself and some of my team members have been engaging with the sector through a number of webinars and communications on the introduction of the new quarterly financial report. Today is the first dedicated session, which will aim to give you some of the practical information on the details of the quarterly financial report, as well as advice on some of the technical aspects. How we'll structure today is we'll go through each component of the quarterly financial report, and you'll have an opportunity to ask questions after each speaker using the Q&A panel, which is part of the WebEx screen. So if you do have any questions, if you look at the bottom right-hand side of your screen, you'll see either a little question mark or the initials QA, and you're able to type your question into the chat box and it will come through to the panel. We'll try and get through as many questions as we can today, but where we're not able to, we'll take those questions away and we'll update our communication materials and online information so that the frequently asked questions can be accessed on some of our online platforms. The session will also be recorded and that will be made available as well for people who are unable to be here today. So before handing over to my colleagues who'll go into the technical aspects, I'll start by giving a bit of background and context for those people on this call who have joined some of our previous webinars. This will be quite consistent with information that we've given previously, but useful to provide for those who haven't captured it. So the quarterly financial report is part of a program of work that has been underway to implement changes in response to a number of Royal Commission recommendations, which were about introducing more stringent reporting requirements and strengthening the prudential requirements of providers. The Royal Commission's recommendations are being implemented through a new financial and prudential monitoring, compliance and intervention framework. And the framework is aimed at improving the accountability and transparency of the aged care sector. So this slide shows you the 3 aspects of the framework. Phase 1 has already been introduced, and that started with the expanded information that was collected as part of the aged care financial report. That was submitted last year. It included the facility level information and a number of other reporting changes. Phase 2 is what we're discussing today primarily, and that's about the introduction of a quarterly financial report and other transparency measures which will help inform consumers' choice around aged care providers. Going forward, phase 3 will be communicated with the sector as part of consultation as we develop phase 3. So the quarterly financial report was shared with the sector in May, and it's available on the Forms Administration website. We'll show the details of that. We'll show the details of where to access this information at the end of this presentation, and we'll also make these slides available. The quarterly financial report will include 4 parts, which we'll cover off today. We've got the viability and prudential compliance questions. We've got approved provider level quarterly financial statements, which are income statement and balance sheet information for both. And we've got part 3, which is the residential and home care labour costs and hours. And part 4 is the food and nutrition report for residential aged care providers. If we flip to the next slide. The purpose of this information we'll go through to a range of different activities. One is around financial oversight, so allowing the department to track, monitor and benchmark the sector. One is around consumer choice and transparency, providing the information collected will provide information to the star rating system, so senior Australians and their families can have access to information to make informed choices. It will contribute to policy development, including policy planning, to ensure that it's based on up-to-date information and data. It will help inform the introduction of ANAC pricing model and pricing studies, and it will also be used as part of prudential standards regulation and quality standards regulation. Next slide. After consultation with the sector, the timeframes that the quarterly financial report will be due. For the first quarter, which is July to September, the report will be due on 4th of November, which is 35 days after the end of the quarter. 35 days will be the timeframe for all other quarters, apart from the Christmas quarter, where there'll be an additional 10 days recognising the leave requirements and those sorts of things over the Christmas period. The timeframes, and in particular, the introduction are critical for the introduction of star ratings, which will commence this year. And providers that do not submit a quarterly financial report will not have their star rating published. Next slide. The other component that we wanted to discuss, but we won't go into as much detail today, is in relation to increased transparency. So as part of the broader transparency measures, each approved provider of residential care that is required to prepare a general purpose financial statement will be required to publish their general purpose financial report on the website, or if the provider doesn't have a website, on a website that is publicly available. It will start for the period of 1 July 2021 to the 30th of June 2022, and the GPSFR will need to be published within 5 months after the end of the approved provider's financial year. This will give the provider 1 month to publish the financial report after its ACFR is due to the department. Okay, next slide. So I'm happy to take questions at the end of this session on some of the aspects which I have discussed today. But I want to make sure each of our presenters has an opportunity in the first instance to go through the technical detail on the aspects of the quarterly financial report. And I'll return to questions on aspects that I've covered at the end of the session. So I will hand over to Nikki Phelan, who will take us through the first part, which is viability questions.
Thank you, Jess, and thank you very much for the opportunity to speak with you all today. As Jess mentioned, my name is Nikki Phelan. I'm the Director of the Financial Monitoring and Analysis section in the Structural Adjustment Operations branch, and I'm delighted to be able to talk to you for the next few minutes to walk you through the questions in the worksheet that really relate to the viability questions. So if we can go to the next slide, please. Thank you. The purpose of the information collected through the viability worksheet is really to help us identify providers that could be facing financial stress, or to identify providers that may be facing emerging risk issues that could lead to financial stress later on. The early identification of emerging risks will enable the department to proactively engage with providers and to work collaboratively with them. We aim to support them to develop options that may be of benefit in addressing some of the financial risks that could be faced. In terms of the questions that need to be answered, there are 3 worksheets, and you can see the first worksheet on screen now. Providers with residential aged care services need to complete the first list of questions based on their residential operations. In the first worksheet, there are 13 short questions that have a yes or no answer, and they're across 10 focus areas. The focus areas include questions on solvency, financial performance results, liquidity levels, occupancy, RADs, the sale of purchase of a facility, business improvement advice, governance and management, recruitment and retention of staff, as well as capital works. If you answer yes to any of these questions, there's a column on the right-hand side, the response column, and we greatly appreciate any information that can be provided. These additional comments that you provide can help us to understand whether your residential operations are facing emerging risks, or if the response noted is a normal and expected part of your business operations. In answering yes to some of these questions, it doesn't necessarily mean that your organisation is facing financial risk. And if we can go to the next worksheet, please. The next worksheet is to be completed by providers with home care operations. In the second worksheet, there are 10 short questions that require a yes or no answer, and they're on 8 focus areas. The focus areas include questions on solvency, financial performance results again, liquidity levels, the number of home care recipients, the sale or purchase of a service, business improvement advice, governance and management, and recruitment and retention of staff. Again, if you answer yes to any of these questions, there is a column on the right-hand side which enables you to provide additional comments. And those comments will really help us to understand whether your home care operations are facing financial risk, or if the response is normal and expected part of your business operations. There's a second worksheet that needs to be completed by providers with home care operations. And if we can just turn the slide, thank you. And it covers the business structures that are used in operations. We're keen to better understand the types of business structures that are used to deliver home care services to consumers. Providers delivering home care packages are asked to identify the types of structures that are used and the percentage of services that are provided through these types of structures. Once the questions have been populated for the first quarter, your responses will be saved, and this means that you'll only need to make changes to the initial responses when there's a change in your circumstances. I might pause now and just see if there's any questions that need to be answered on the Q&A.
Thanks, Nikki. There are a couple of questions that have come through. Some I don't think will go to you, so I'll hold those, but there are a couple here which you may want to answer. One of them is if a provider was to answer the question around whether they're unable to refund RADs in the statutory timeframes, but the reason was it was not refunded due to something like a clerical oversight error. Would you be interested in knowing that, or is it just about RADs that are not refunded due to liquidity issues? Is this something that you would suggest that you might want to note, but provide additional information in the comments.
Yes, absolutely. We'd be keen to understand if any events have occurred similar to that, and certainly providing that context through the additional comments will help us to understand if there's any concerns there, that, whether it's a clerical error or if there is an underlying viability concern that we should perhaps engage with a provider.
Thanks, Nikki. We've got a question here. This is probably one for me to answer, which is it a requirement for these reports to be endorsed by a board or senior executive? The requirement for the sign-off is that it will be the same as the ACFR requirements. The other question here is, we've got a question which again I think is probably one for me, that's been answered, but I will let people know, is does the quarterly financial report replace the aged care financial report, or are both still required? So the answer there is no, the QFR is in addition to the ACFR. However, you'll notice that some aspects of the quarterly financial report are also included in the aged care financial report. So that will be the financial statements and the care costs and labour costs information. So we're looking at making sure that information will flow through to the ACFR and provide a cumulative total. So providers won't need to resubmit that information, but will have the chance to update or make changes. But the ACFR also includes additional information, which you will certainly be aware of, which is not included in the QFR. So the two reports will remain. Another question we've got here, which has been answered, is around if reports are already published on the ACNC website. Does it need to be published on their own website? The answer there is no. The report just needs to be available on a publicly available website. So the ACNC website would satisfy that. A further question that we've got coming through is there an independent auditor requirement for the QFR? No, there is not an independent auditor requirement. It is just signed off by a senior board member. Okay, I've got a couple of questions about whether the ACFR applies to CHSP, and probably that we might have CHSP providers that want to jump off this webinar if it does not. And the answer is no. Aspects of this report, which I can take you through, apply to home care, but not CHSP providers. So if you're here on behalf of a CHSP provider, you can feel free to leave, but we'd of course welcome you to stay. So in terms, I might just cover off quickly before moving on, the different sections and who they apply to. So the viability and prudential questions apply to both residential and home care. So if you're a provider that delivers CHSP and home care, you will have to complete it for the home care requirement. It also applies to not-for-profit and for-profit, but government providers will not have to submit the viability and prudential questions. The quarterly financial statements apply to residential and home care, but not government providers. The labour costs and hours apply to residential and home care and apply to all organisation types, including government providers. And the food and nutrition report applies to residential providers, including government, and also applies to MPS services and National Aboriginal and Torres Strait Islander flexible aged care services. So I think that answers a couple of questions that were coming through. We might at this point go to our next presenter. I think we've answered most of the questions here around who the information applies to and auditing requirements. So we might go to our next presenter, who will take us through the quarterly financial statements, and that is Grant Corduroy, who is a senior partner at Stewart Brown. Thank you, Grant.
Yeah, good morning, everyone, and more than happy not only at this presentation, but during the course of the quarterly financial reports in consultation with the department, is to answer questions as we go, because there are certain complexities, and obviously the more information. I think at the outset, exactly what Jessica said, the purpose of these reporting is to get further transparency, and transparency really helps with policy development. And we know that in both residential aged care particularly and home care, there are certain concerns about the funding and the amount of the funding and how the funding is used. And this will assist the department and the Quality Commission in consultation with the Pricing Authority to hopefully understand the components of the costs so we can get funding that's equivalent to what's required, with the ultimate aim that we all have to improve the quality of care all round. If we just move to the next slide, the quarterly financial statements are very similar to what you've seen in the aged care financial report. So it's a balance sheet and it's a income and expenditure statement. It's at the approved provider level. So in the aged care financial report, it was at the parent entity or the consolidated level. This is only at the approved provider level. So if you're an approved provider that has, say, 3 different entities at three different residential aged care homes, you only have to provide you have to do it 3 times for each of those particular entities. There's not a consolidated. It's very similar again in format to the aged care financial report, and in fact your statutory accounts. It's a liquidity form of balance sheet. We show the assets and liabilities in descending order of liquidity. The residential segment is obviously your purely residential aged care segment. Home care, of course, is for home care packages. Community segment is other community care segments, which could include disability or CHSP. Also could include community housing, because the retirement segment, to make it simplistic clear, are all homes that are under the various state-based Retirement Villages Act. And that's probably a good way of understanding what's under retirement. If it's rental property on community rental property, it'll come under the community group, and of course, are other activities that approved provider might have. So the balance sheet, again, you need to allocate the assets and liabilities as best you can. Some are very obvious, things like RAD balances or retirement living entry contributions. Sometimes in the case of leave provisions, you need to make an assessment of the leave entitlements relating to a particular segment. You'll notice that cash and cash equivalents doesn't have to be allocated by segment, nor does the equity position. We're not looking at an equity result by segment. So the balance sheet is fairly consistent with what you've seen in the aged care financial report and your normal statutory reporting. On the next slide, we look at the income and expenditure. Again, that's similar to the statutory format. So you're looking at your operating income, you're looking at therefore your fair value adjustments, non-recurrent type income lines, and your expenses. The main ones we're targeting, of course, is your salaries and employment benefits, management fees, depreciation, finance, any fair value adjustments. We should see how they impact the results, and then of course other expenses. So again, similar format to the aged care financial report, similar to what we have seen before when you're preparing your statutory accounts. The external lines of credit, this is important when you're looking at the prudential arrangements and where you are. So we want to include those. If you've got external lines of credits, how much you've drawn down on, how much is the undrawn amount. And that's very much for a prudential assessment analysis. And the key ratios, again, similar to the ACFR, the liquidity ratio, which is in a sense, your liquid cash assets and financial assets over your debt, and your capital adequacy, which is looking at your overall assets and liabilities compared to your debt. And again, this is going to be important, as Nikki Phelan in the previous one, for the department and in fact the quality agency to make an assessment. And it's not a critical assessment. This is to understand how the sector is performing, see what what viability or sustainability factors we might have, so we can have an earlier intervention if required, to assist or see what's happening, and it allows providers to get feedback of what's happening in the section. So this part of the Quality Financial Report is very similar to what you're doing in the aged care financial report. Comes from your management accounts, similar basis to your statutory accounts, and really targeted, but nothing new to what you've seen before, except that it's at the approved provider level. And in the next slide, just quickly go to the next slide. What we've done is we've put some considerations which I've talked about when you are doing it. Again, showing the section between the various segments, why the financial information is collected and need to be undertaken on a timely basis, why we're getting the areas where you want to know what your credit limits are or what your credit lines of credit are, and the liquidity and capital adequacy. So it's a little bit of a summary sheet that will come with this. And as I think one of the questions that was asked, these slides will all be made available on the Department of Performance Administration website. So I might just stop there to see if there are any questions that we have in this regard.
Thanks, Grant. We do have a question, which is, what if we are not able to split out some of the assets or liabilities between various segments, as currently this provider does not do segment reporting for balance sheet items?
Right, and look, that's not an uncommon area. So our advice always is allocate when you know exactly where it is in the segment. For example, in say property, you might know what property relates to residential, what property might relate to retirement living and community. Then I would use our other allocations are based on where you feel the percentage relies. So, you know, in your business, you might say 80% of our business is residential, 20% relates to, just as an example, community or home care packages. Allocate most of the assets and liabilities on that basis. So how we'd always started was to say, what assets or liabilities do we know directly goes to a particular segment, and then make an allocation adjustment for the others based on your business that you're running and what the percentage of the business relates to each segment.
Excellent, thank you, Grant. Another question we've had, a similar question around allocations, is where to allocate retirement village assets, liabilities, and profit and loss.
Well, we do have a retirement village segment. So, for example, now the retirement villages, there's two basically aspects. Some treat a retirement village as an investment property and their disclosure. Others might treat it as property, plant, and equipment. But again, the retirement village assets, the most assets in a retirement village are relating to property, and the most liabilities is relating to entry contributions, and there might be some more staffing. So again, we have that segment that's called retirement village, retirement segment. Similarly, in income and expenditure statement, the retirement village income is resident fees and also any deferred management fees, and of course the expenses that relate. Now again, in the retirement villages, under the Retirement Villages Act, you have to prepare budgets and income and expenditure for the residents. So that's your good starting point for the income and expenditure. Then you overlay that with the operator income and expenditure on top of that.
Excellent. There's a question, I'll take this one, which is, will there be a set liquidity ratio or capital adequacy ratio that must be maintained? So at the moment, the answer is no. There is a requirement to have to maintain sufficient liquidity as per the existing legislation. The Royal Commission did make a recommendation to introduce liquidity and capital adequacy requirements, and the department has undertaken to consult with the sector on what those ratios or requirements would look like and what a transitional arrangement would look like. We expect that consultation will commence in the next few months, and there'll definitely be a webinar and conversations with providers on that Royal Commission recommendation and what it would look like. But there's no kind of introduction timeframe in the next 12 months or anything like that. We've also got a question here, which is, please confirm that if you have more than one location, please confirm that is if you have more than one location company offering services but not consolidated for tax. I'm not sure I understand that question. Grant, does that
Look, I'm looking at this.
They're saying, how do you have to do it? Yeah.
I'd probably start off with the basis of the approved provider. So the approved provider has homes that are in different location. Obviously, you've got to consolidate those homes under that approved provider entity. From a tax consolidation point of view, because often you might have several entities that are consolidated for tax. No, don't look at it from a tax consolidated point of view. Purely look at it, the entity that is an approved provider and what the transactions that relate to that entity, not from a tax consolidation point of view.
Excellent, thanks, Grant. Okay, if NDIS services are provided by the aged care provider through the same legal entity, does that need to be included in the segment reports? I've added the segment reports element.
Yes, it does. NDIS becomes part of community. So
excellent.
You've got an area called home care, then you've got community, which includes NDIS and CHSP and other community activities.
Okay, this is an interesting question. Can the quarterly financial report be submitted by Stuart Brown quarterly benchmark that is submitted? So, Grant, are you interpreting that question as if a provider is part of the Stuart Brown survey, can they submit that as part of this? Is that how you would interpret that question?
That's how I interpret it. And yes, for both this and also the next area that we're moving into, as well as the aged care financial report, if we've got that information, if they're part of our survey, we'll have a mapping tool to automatically have it submitted in the quarterly financial report. So there's no duplication at all of entry.
Thank you. Okay, there's a couple of questions which are, they're very similar. So should transitional care be reported, and if so, where? And is there a definition of community, or like our company provides aged care and nursing, how should these be allocated? Grant, happy for you to talk to that, but what we'll also do as a takeaways and action is we'll look at our definitions and information around definitions on community and make sure that some of these questions that have come through is really clear in our communications materials so that providers can access those. But Grant, did you want to comment on those two things?
Look, I think it's very good to have clear definitions.
Yeah.
We're talking later about the definitions that we've got here, so people know exactly what is under residential, what is included in home care packages, what is included in community. I think there are definitions already there, but I think it's important to reinforce those ones. Yes.
Okay. Okay. Will there be a question in both the QFR and ACFR as to the number of hours, taken to pull together the information? Okay, so this is a question around, I guess, the costs of completing these reports. I think, I mean, the answer is there's not a specific line item captured in that. We certainly collect information around quality and compliance as part of the report. So we would expect that information comes through that in the quarterly financial report, but there's not a specific line item associated with this. So at this point, I might hold, this relates to star ratings. Yeah, okay, we're now getting some questions on care minutes, which we might hold over for the next section. Grant, was there anything further you wanted to say on quarterly financial statements?
No, I think that it's covered. I think there's normally most of these, except for some organisations not having segment, it's very similar to what they'd be doing in their management reporting. And again, if we have any questions on segments, we'll have clear clarity on those. And I guess through the department and also the help desk that we're running, we can certainly answer and assist with any of those questions.
Excellent. There were two questions from earlier, which I'll also answer before we move on. Does the aged care financial report still require breakdown by facility? The answer is yes. So the aged care financial report will be broadly, I'll say 90%, maybe even 95%, the same as last year's aged care financial report. There's also a question which is similar, is the reporting format of the quarterly financial report along the same lines of the ACFR, or is there something extra? So the answer is the reporting format is along the same lines, and we've really tried to ensure that the care costs and labour costs and the viability questions are presented in the same format as they are for the ACFR, and we're seeking to make sure all of there is as much consistency as possible. However, the ACFR doesn't include the viability and prudential questions because you've got the prudential statement that is provided as part of the reporting requirements with the ACFR. And the facility level information in the annual report includes more information than what we're requesting in the QFR. So while there is consistency in some elements, there are also variations. Okay, let's move on to part 3, which is the care labour costs and hours, and back over to Grant to take us through this one. Thank you, Grant.
Well, thanks, Jessica. And again, this is a lot of detail. I think, again, it's looking at why does the department and policy want to get this information? And one of the big things that we've talked about for a long time is what is the cost of care, and how to, and therefore make certain the funding is appropriate for the cost of care that's delivered. Understanding that all regions are different and you have different cohort of residents, so we need to get a broad-based view of what is happening in a regional area as well as particular demographics. The Independent Pricing Authority will also be using this information as they gather the data to be able to make a recommendation for subsidy. So it's important to say that this is not here for any comparison purposes or benchmarking purposes like Stuart Brown. This is for the department and the Independent Pricing Authority to get information so they can determine exactly what the components of direct care are and therefore what would be a recommendation for subsidy in the ANAC one coming forward to be able to equate to what that's required. So the more information that is getting, it's for that targeted basis that we wanted to get this data. So if we go to the next slide, and this is looking at the costs. So this is what the costs of care are. Now this is again very similar to the ones from the Stuart Brown survey that have been doing it for a while. I make that point because it is able to be prepared, but there are a few little difficulties coming through. So when we look at the labour costs, the easiest way of looking at it is the costs of employment. So in other words, it includes all the remuneration, your leave, accruals and payments, superannuation, fringe benefits if you're paying them, termination payments. So it's the cost of employment, but it excludes the associated costs such as payroll tax, workers' compensation premium, or staff training. So that's the basis when we're looking at what's involved in the cost. Now you can see clearly the delineation which is starting to have a link with the minutes. So you can see that it's got registered nurses, enrolled and licensed nurses, and also the personal care staff. Those 3 categories are currently the ones that are aligning to your mandated minutes that's coming forward. And then care management staff. Now, care management staff might be your facility manager or a registered nurse is doing care management. Now, those at the moment, that direct link, unless they're directly interfacing with a resident, care management, when it's an overall care, doesn't form part of your minutes. But it's really important to understand exactly how much that is and the components of what they are. You can see that this is at individual home level. So if you've got 7 homes as an approved provider, you have to show it individually, just like in our survey. Again, This allows, when we're looking at the assessment of future funding, what the different regions might look like as far as any changes in the funding. Allied health, the first section is when you have allied health that are directly employed by your organisation. And you can see it's quite a substantial split. We're looking at physiotherapy, occupational therapy, speech pathologists, podiatrists, dietetic care, other allied health. Now, what we do know is that there's been a lot of level of lifestyle, a lot of concern whether the allied health funding is appropriate for the care that's needing in an increasingly acute residents moving into residential aged care. So this allows us to understand, the pricing authority to understand as well, what are the components of allied health and how do those components fit into a funding arrangement. So that's why this level of detail is really required. And yes, there is onerous to get that detail. If you're employing allied health, that's easier, obviously, than when you're using contracted allied health. And you can see agency staff costs. I think that we know that one of the significant areas at the moment is staffing, retaining staff, attracting new staff. And of course, the consequence of that has been an increase in agency staff costs really across the board. So this is allowing us to understand exactly the impact of that agency staff and the cost of that agency staff. Now, again, you put in you split it between resident nurses, enrolled nurses, and personal care, and it's the amount that you pay to the agency. So, in other words, it's hypothetical. If your registered nurse is $30 an hour, if you're paying for them, but you're paying the agency $36 an hour because of their margin and their on costs, you put in the $36 an hour is included in these costs. So it's the actual cost that you're paying the agency for the agency employed staff. Now, allied health, and this will require some additional help. Many providers, the majority of providers, probably outsource their allied health, and they outsource each of these various components. So it's a matter now that we've got to engage with your external providers to say that we need to have the costs split up, and you should probably need to that for your own management anyway, but also later on we'll need to know the hours of each of these various areas. So that will be a change that's going to be required, and we recognise that is a change from particularly the external providers when you're using external suppliers. But I think it's very important that we understand what is the total allied health cost, be it from employed by yourselves or external employment, and similarly contract costs for if there are any additional components of your direct care that's a separate contract, we want to allocate those. So this is a simple, again, it's targeted. Notice that we're not looking at revenue. Notice that we're not looking at catering, cleaning, laundry, or other services. It's purely targeted to the direct care part of residential aged care. If we go to the next slide, and the next one is where we're now starting to look at the hours, the worked hours. Now, very important that we're looking at worked hours as distinct from paid hours. So worked hours is where physically a staff member is been rostered on and working a shift. And I think that's going to be very important. So in other words, the best source of that is from your roster. And the secondary source could be from your payroll, but make certain that from the payroll, it doesn't include leave hours or RDO hours or other hours. One area that could be a little bit difficult, and is you can see that for the resident nurses, we're splitting it up between the 3 shifts. Now, why? Is one, we're looking at the impact of 24/7 on nursing staff. Now, many homes now already have 24/7 because some of the state legislation requires it. But this is sort of looking at the impact of resident nurses and how many are on each shift and what the impact is going to be on moving towards a mandated 24/7. This is assuming, of course, we can get staffing, and we know that issue there. Now, we've allocated morning, afternoon and evening shifts. So we've got hours there, 7 to 3. Now, not everyone will have that same hourly basis. So I think we've got to be sort of pragmatic in how we look at this. So we allocate morning shift. Those are all working on a morning shift, irrespective of it's a 6 to 2 or a 7 to 3 or whatever the times are. How many are working on an afternoon shift and how many are working on an evening shift, purely for registered nurses. So it's the hours. If they overlap shifts, I would take a pragmatic approach. If you know that they've worked 4 hours on, we'll say, a morning shift and then another 4 hours or 3 hours on an afternoon shift, and that's easily allocated, allocate it that way. Otherwise, allocate it to where the majority of their time is spent, being a morning and afternoon shift. So there will be a little bit of work, but again, this is important when we're looking at the registered nurse hours and minutes coming forward. Again, I state that it has to be based on the worked hours rather than the paid hours. And similarly for allied health, for the agency staff and for the allied health contracted staff, we need to know the hours. So that means with the agency, we should know when we're paying them how much we're paying them by the category, but we probably need to do a bit more work. We recognise in the case of allied health with the external providers to be able to get the dissection of that way. Now we know under 4B, sometimes a physiotherapist will provide it for the services to maybe 20 residents, and they'll say it's 25 minutes or something along that line, and we've got 20 residents. We need to also find out how many hours the physiotherapist has worked in that regard. We just go to the next slide, which is really wrapping up. Additional hours, if there are any other non-worked hours that we think is relevant, we need to put that in as really the balance. The average hourly rates of pay, and these are calculations done so that can help. Now, what it is what the average registered nurse rate is, what the average endorsed enrolled nurses or personal care staff. Now, registered nurse, you might have grades 1 through 4 or 1 through 6. It's the average of your registered nurse staff, and it's their average rate of pay, not including superannuation and other areas. What is their average hourly rate of pay? And this allows, when we're starting to look at the costs and we convert it by the rates of pay, it really allows us to get more information when we're looking at the cost of care and the mix of staff required. Now, part of the visibility care is bed days. So the occupied bed days is the number of bed days which you pick up from your Medicare statement, and you know how many days in a month or in the quarter in this case have residents physically occupied a bed, and agree that with your Medicare statement. And available bed days, and those involved in the Stuart Brown survey know that we're very strong on looking at how many bed days are available. So, for example, if you've got an 880 bed home that's got approved places or 80 beds, but only 70 beds are physically available, then your available bed days is your multiple of 70 beds. If you're going through refurbishment or a ramp-up stage, again, it's how many beds were available during the course of that quarter that a resident could occupy that bed, whether occupying it or could occupy it. So available bed days is based on your own circumstances by home of how many bed days are physically available. And then, of course, this then works down to the direct care minutes, which we know is a very big topic going forward. And the direct care minutes gets this information, divides it by to work out how many minutes for registered nurses, enrolled nurses, personal care workers are included. And of course, it includes your agency staff. How many minutes are for each home? Divides it out to give the calculation. And this is going to be very important. And it's also important to remember that not every home has to have 200 minutes. That if you've got a lower, let's call it resident cohort and acuity cohort and a smaller home, it doesn't necessarily mean that it has to be up to 200 minutes. The ANAC will be looking at exactly what's the cohort and how many minutes based on the resin mix that we have going forward. But we need to have those minutes. The minutes will be part of the star rating system. As we know, there's lots of consultation has been in the past and ongoing. It's still being developed, but we understand from the area of the department that's looking at it that the minutes will approximately represent 22% of the overall mix for star rating. So that's quite a high percentage. So that's fairly important when we're looking at getting those minutes at accurate minutes. Just go to the next slide. And these are some of the you can go to the next slide. So, sorry. Yeah, we've just put down a number of different pages giving more clarity and more explanation than I've just given verbally. So this is the care minutes one, talks about the star ratings, which I've mentioned, talks about how the calculation will occur, so you can self-check yourself, the calculation. And a good test we found when we're doing the cleansing of the data is that if you get your dollars that you've paid the labour costs divided by your average rate of pay, and see if those minutes equate to the minutes that you're showing. And we did see some major variances in that area, and we think that's a good test for you to do internally to see that your average rate of pay divided by the dollars that you've got in there, how does that then convert to hours and convert that to minutes. But again, this shows you the calculation of the minutes and how you can determine your average care funding based on ACFI. That'll change slightly with ANAC. And you can see the bottom point, which is important, is that a facility that receives an average care revenue of, let's say, $150, currently ACFI, is not expected to be delivering 200 minutes of care. And I think that needs to be an important point. I think that the Royal Commission wanted to get an average of 200 minutes, and of course they're moving that up to 225 minutes, maybe within 14 months. We go to the next slide, and we're just talking about allocating hours where staff cover more than one role. And for example, the care manager and the facility manager might be a registered nurse. So one thing that we need to look at here, I think, is look at your job descriptions for those people to make certain what their job description states and therefore what their roles transition. And then it's a matter of them determining how much of that role is direct care delivery and how much of that role is actually care management. But I always think that have as a good support the actual job description for those roles, which will sort of give, I guess, good basis for determining some of those allocation areas. Average hourly rates, as we talked about, get the average rate for each of the staff have to be the average of the different grades, but for registered nurse, enrolled nurse, and also the personal care workers. Registered nurses by shift, and again, at the moment the target is 16 hours RNs, but of course the incoming government has said that they want 24 hours coverage. Many homes already have 24, so this is again giving information back to what is the impact of 24/7. How many do you need at the overnight? For the overnight, how many registered nurses in the afternoon shift? How many in total? What are the consequences of all? Very important information to be gathering from a policy point of view. Next slide. Now, there are lots of questions about how much of your total funding relates to your direct care, particularly your staffing costs. So this is based on the expenditure side, not the revenue side. So of the expenditure side, both through the aged care financial report and also through the Stewart-Brown survey, of the expenditure side in direct care, so you're directly relating to your ACFI and ACFI supplements, 78% is clinical, which is RNs, ENs, PCW, including agency staff. Allied health is some 4%. Other lifestyle is some 3%. Consumables 3%, and other is 13%. So that makes up at the moment 100% as a guide of your expenditure. And again, whether that's sufficient, that's a question that when you look at the overall funding. But this gives you a good guide to see, and the department wants to see if that relates, if those percentages continue on that basis with a changing nature of residential aged care, and particularly higher acute residents and more dementia residents coming into residential aged care. So the next slide is talking about agency staff. And again, agency staff are really important. What we have seen in our survey is a continual increase in the amount of agency staff because of retaining staff and attracting staff is really difficult at the moment. And this is an impact, and this is a cost impact. So it's important to understand exactly what that means when we're looking at future funding levels, similar to allied health and similar to other care staff. Next slide, thanks. Now, home care packages. So this is a very similar basis to those involved in home care. If you've got home care packages with residential care, this won't be much different as far as the basis. If you're just a home care package provider, this will be slightly more information that you had to submit for your aged care financial report along the same lines as we talked about. So again, we need about each of your planning regions or each of your areas that you're providing home care. So you might have Metro North or Metro South or a particular town or two locations in the town. So it's really how you define your areas within the home care space. And again, similar sort of thing, the labour costs. They want to know for your direct care labour costs, what are the style of labour, what are the, how much is a registered nurse? If you're using enrolled nurses, how much is that? Personal care staff, allied care staff, other staff. And again, similar to residential, this includes all of your costs of employment, as in employing a particular person, but doesn't include the associated costs such as payroll, tax, workers' comp, staff training, but includes things like, as you say, health superannuation, leave entitlements and accruals, fringe benefits, and the like that. And again, the agency staff, same sort of split up when you're paying an agency or subcontracting it, the staff by the registered nurse, enrolled nurses, personal care, allied health, and other agency, similar to what I just talked about with residential aged care. If you're using total subcontracted staff, in other words, they're not internal staff, then you need to again speak to your subcontractor who will need to provide you that information by staff category. And again, they may already be doing it. They probably should be doing it anyway, but so you know that and through your payables, when you're paying them, you know exactly what you're paying them for. And of course, in home care, this needs to go onto their monthly resident client statement. So you should have that information fairly readily available anyway, but it needs to get that information. And similarly, if you've got total subcontracted fees, so you might have an arrangement where you're just paying a separate franchise fee. This is not common, or a separate commission, but if so, we need to know what that is, because we want to know, again, just like residential care, what are the costs of providing direct care in home care space, so we get funding that's commensurate with what those costs are. Again, this is not a comparison. This is not a benchmark. We're not looking at revenue. We're not looking at all the other costs. This is purely drawing a direct relationship between what the funding should be to meet the direct costs of care. And if we go to the next slide, which will be again more, this is the labour hours, similar again to residential. They're worked hours, not paid hours. So you need to get it from your roster or your scheduling. I think the good way you might get it is from your monthly statement information that you give to your clients, because that should be saying how many hours of delivery you get. So that could be a third area in home care that you can source this sort of information going forward. And again, you need to get it for both your internal direct care staff, your agency staff that you employed, your external broker or subcontracting staff, care management separately. We want to identify your direct care and show separately, which is important. Care management, know what they are, and in this case also any administration, non-care staff, which could be your coordinators when you have a coordinator which assists with the rostering and the scheduling and those types of areas. Very important. They're all in the mix of knowing what's required to provide the right quality service and care to clients and consumers in the community care recipients. Next slide is just again, just a little bit more detail, like similar to residential care, some more detail on what makes up direct service delivery, agency staff, brokered staff. So this gives you a guide, and I think a fairly good guide going forward. Again, a help desk will be in operation. So, and the help desk is there not only just to answer questions, but to look at specific circumstances and help with those specific circumstances. If you've got queries, please avail yourself of the opportunity always of coming to the help desk. It's all confidential, of course, but also if there are questions that are coming from numbers of providers, be it home care, residential, they'll be able to frequently asked questions, which will be updated regularly on the department and the Forms Administration help sites. So I think it's an opportunity. As we're getting more requirement for information, we want to assist in any way we can. And the next slide, please, is looking at data definitions. So it's very important to look at the definitions, similar to our survey, the Stuart Brown survey. We need to, as much as possible, compare apples with apples. So the data definitions are located on the Forms Administration website. You can download those, have a look at them. If you've got any queries, go to the department, go to the help desk, they can answer the queries. But there's the importance of any data collection. We have to be able to be fairly strict where things are allocated, so we take arbitrariness away from it. And I think that's going to be a very important component of when we're looking at it. So the data definitions, this is just an extract on this and the next slide to show you what they look like. They're fairly clear and they're fairly lengthy in a way, but the point of that is to say what should be included and what isn't included, so we don't get too much compromised data coming through. So I think, Jess, from that point of view, I'm happy to, again, this is just another example of the data definitions extract. I'm happy now to take questions, which I'm sure there will be a number of questions coming through.
There are many questions, Grant. Thank you. That was really detailed, and I'm sure really helpful. Yes, we do have a lot. I'll give you a break, Grant. There are a few questions here, and I think it's just useful before we go further to clarify the use of the care minutes, particularly for star ratings. And there are a few questions here saying, how will the care minutes be used? Will they be used to assess against the target care minutes that are being that have been identified under ANAC? Emma Cook, I might get you to just talk broadly about star ratings, and then I'll get Mark Richardson to add any further detail around the monitoring of care minutes through the information that's provided, and then Grant will come back to some of the technical questions. So Emma, I'm hoping we've got it set up for you to speak.
Thanks, Jess, and I think we do.
Wonderful.
So thank you very much, and I'm happy to go into a little bit of detail on star ratings. So I'm sure everyone on the call will be aware that government's committed to publish star ratings for all residential aged care services on My Aged Care by the end of 2022 to support consumers to make informed choices about their aged care. So what has been committed to and it is expected to be in place by the end of this year is an overall rating as well as subcategory ratings against all of the data that feeds into the star rating construct. And so there's 4 sources of data that will input into this first iteration of star ratings, and it's exclusively those 4. So I've seen a few questions coming in around additional information or financial information, but I have to say that at this point in time, the only data sources included in the star ratings at an overall level and at subcategory levels are the existing quality indicators, so the current 5 in residential care, pressure injuries, physical restraint, unplanned weight loss, falls on major injury and medication management. The service compliance rating information, so that's the same information in any new regulatory powers that the Commission has that currently constitute the DOT ratings that are on My Aged Care. So that information comes from the regulatory activities of the Aged Care Quality Safety Commission. Consumer experience information, and so that is, there's currently, again, consumer experience information for a lot of services on My Aged Care, previously collected by the Commission, and that survey will be renewed, as many of you will be aware, through face-to-face interviews being conducted by a third-party vendor with approximately 20% of care recipients. And then finally, the staff minutes. So the care minutes that are being reported through the QFR and on a quarterly basis, and that information will likely be considered in the context of ANAC classifications. So each category, as I said, will have a standalone rating, but then we'll input into the overall construct. And the weightings, again, some people have asked how it's all going to combine or how we're going to come up with a rating once we get all of these bits of information. It is an algorithm, so it will combine all of these with a weighting of quality indicators having 15%, service compliance having 30%, consumer experience having 33%, and care minutes having 22%. That's the current design, and that was based on extensive consultation across stakeholder groups, including with senior Australians and their representatives. I should stress that we took into account both maturity and the importance of each data source in the eyes of the consumer, and that senior Australians and their representatives felt very strongly about the importance of care minutes information and its inclusion here. So the care minutes aspect, as will all of the aspects through star ratings, follow similar patterns and rules. We will have 1 through to 5 stars, largely with 1 star representing something below standard, 3 being around about average, and 5 representing something quite outstanding. We'll largely have a rules-based approach, so we understand, and we've heard from providers, the importance of being able to understand what's required to attain each level of rating. And so what I should stress, and Mark may wish to speak to this further, being responsible for care minutes, is that there currently isn't a view that those rules would expect an average that aligns with the future mandatory care minute targets. So that's really important to note, is that we're not expecting that as a base or a minimum standard. We understand that that's not mandatory at this point in time, and so that is being considered and worked through as we refine the design of this and prior to ministerial agreement. So we have also heard the need for frequent data refresh, and that's the basis for quarterly inclusion of things like care minutes, and we'll show information like historical information over time, and also we are working on a provider interface that will allow you preview access to your ratings before they go live, so that you can see them, you can know what they are, you can prepare for those, and you can notify us if you have any concerns about the IT that's in place or the algorithms. But largely that's the plan, and it's been rapidly progressed, is well developed at this stage, but is subject to ministerial decision and agreement to proceed with what I've spoken through there by way of weightings and design. So hopefully that provides a nice overview and puts, I guess, answers a number of those questions that we've received so far. And of course, we'll continue to communicate once that ministerial agreement is received and final design is confirmed.
Thanks so much, Emma. Mark, I'm going to go to you, Mark Richardson, just to make any comments off the back of that, but also there are a few specific questions that have come through. Cynthia has been doing a great job answering them on the chat, but just broadly for your information, if you wanted to comment, Mark, clarity on the definition of care and where that definition can be found, whether personal care workers providing lifestyle services are included in that definition of care, and whether the case mix adjusted, and whether the quarterly financial report will be used to assess whether the case mix adjusted minutes have been delivered. So that's a lot, but Mark, perhaps if you wanted to comment first on the direct care element, the definition and whether lifestyle's included.
Yeah, so in terms of, your first question's around direct care, is it? Sorry.
Correct. Yes. The questions are what is the definition of direct care?
Okay, look, that's a good one. So direct care, and I guess it relates to the personal care as well. When we talk about care minutes, we're talking about professions that are classified as registered nurses, enrolled nurses, and personal care workers. So allied health professionals aren't included in that mix. The 200 minutes and the 215 minutes that government has now committed to only includes those three professions in terms of, I guess, measuring those targets. When it comes to care, any individual associated with those professions that's involved with the care of an individual can count all their work hours, with the exception of training and leave, towards that target. Now, where they're in a hybrid role, we would be, I guess, you would apportion, I guess, the number of minutes associated with the care of an individual towards that target. And just to be a little bit clearer, I guess the types of care that we're talking about are associated with an individual. It could be wound management, diabetes management, behavioural management, all those types of activities. It could be liaising with family, setting up appointments with doctors, all those, I guess, activities associated with the care of an individual. If someone's involved with other organisational type activities, so an RN that might be involved with rostering, an RN that might be involved with facility management, that time would not count towards care minutes. So some of this, I think part of your question too, Jess, was where this can be found. There is a fact sheet on our website that goes into a little bit of detail in relation to this. We get this question quite a lot. We think we need to expand on that fact sheet, and we are doing so at this point in time. So what we're looking at doing is adding some worked examples to that fact sheet, outlining what I just discussed, to make it very clear to people around what can count and what wouldn't count. So I think that probably answers a couple of parts of your question.
It does.
Questions, Jess?
It does. Thank you so much, Mark. That's really helpful.
And I think there was one more, wasn't there?
There was. I think Cynthia has answered it online, whether the data that's reported on care minutes through the quarterly financial report will be used to monitor the delivery of the case mix adjusted minutes that have been identified through ANAC.
So yes, that's exactly the purpose, and it's why it needs to be submitted on time. If we don't have that quarterly report, then we can't provide a star rating. So it's going to impact what's publicly provided for your facility if it's not submitted on time. And I think Emma touched on this. We are very aware of the 1st December report when it comes to care minutes. We're working with government on a solution to that first report, noting the fact that the care minutes targets don't become mandatory until the 1st of October 2023. And yes, the 1st December report is based upon a quarter where you're receiving ACFI funding. So we're completely aware of that issue. And as I said, we're working with government on potential solutions for that.
Thanks, Mark. Okay. We've just got, I'm looking at the time, and we're still to get through the fourth component of the quarterly financial report, which is food and nutrition. So I am going to go to Kate, even though I'm conscious that we've got a lot of questions. We'll get through this, and then I'll return to the questions that we haven't yet answered. Look, depending where we get to, we will work through these and develop questions that will be made available. And there will be another webinar where we will focus on the care minutes and labour cost aspects. So thank you, Grant. I'm sure we will return to you shortly, but Kate, over to you now.
Thanks, Jessica, for the introduction. I'm Kate Apsmuir, and I'm happy to be joining you today in my role as the Director of the Transparency and Risk Profiling section in the Quality Assurance branch in Ageing and Aged Care. Part of the role of my section is the responsibility for food and nutrition in aged care, which this includes reporting under the basic daily fee and the soon-to-be quarterly financial report. Today I'm speaking to you regarding the food and nutrition component of the quarterly financial report, its purpose and context, and how to complete it. I'll also be able to take some questions at the end if we have time. Change slides, please. Since July 2021, sorry, I've got a little technical issue, my apologies. Since July 2021, there has been a new basic daily fee supplement of $10 per day per resident provided to support aged care providers to deliver better care and services, focusing on food and nutrition. To be eligible for that supplement, service providers have entered into an agreement with the department. From the 1st of October, the BDF supplement will be rolled into the ANAC funding for residential services, and there will no longer be a separate reporting arrangement. Reports against food and nutrition expenditure will be a component of the quarterly financial reporting. While MPS providers are paid under a different funding model and are not in scope for ANAC on 1 October, the supplement will be paid to services on the basis of allocated places. Likewise, NACSIFAC program services are funded via a grant program agreement and not the ANAC funding model. Their BDF will continue to be paid via this mechanism as the additional $10 per day supplement. As part of the quarterly financial reporting, the new food and nutrition reporting requirements will begin in the 2022-23 financial year, with the first report due on November 4, 2022. Unlike the current arrangements, the QFR food and nutrition reporting will be mandatory for all residential services, NACSIFAC and MPS services from October 2022. This reflects the government's commitment to greater transparency of provider expenditure. Unlike the BDF reporting, all new food and nutrition reporting questions will be mandatory. Doing this supports us to inform future food and nutrition policy and will also help the Aged Care Quality and Safety Commission to monitor the sector and identify areas where risk may be a nutritional risk, where residents may be at nutritional risk. Along with this change, there are a number of other changes that will be taking place in how you will be reporting to the department. I'll be going through these changes with you this afternoon in order to make the transition to reporting for the BDF in the quarterly financial reporting system seamless. Next tab, please. If you look at the QFR, the food and nutrition tab is the last one in the template. At the moment, it's the red tab. All residential, NACSIFAC and MPS services will complete this section of the QFR. Next slide, please. The first section in this tab asks for costs related to resident expenses, which are broken down into oral nutritional supplements, this doesn't include enteral or tube feeds, and oral health living expenses. These expenses could include toothpaste, toothbrushes, floss, denture cleaning solutions, reminder systems, and other items needed for good oral health. Please note this does not include labour. For this section, you can provide just the totals of what was spent on these items in the first column for the quarter. The next sections ask for costs related to allied health expenses and allied health hours, which are categorised into either dietetic care or speech pathologists, and which are further broken down into employee or consultant agency labour for each. In this section, you can also provide totals of what was spent on these items and the hours of labour involved in the appropriate total column for that quarter. This has been streamlined from the current reporting, as only expenses for dietitians and speech pathologists are now requested. Next slide, please. The next few sections are specific to reporting of catering and have changed from the BDF report. As a brand new requirement, we will be asking you to indicate how the majority of your main meals are prepared by selecting your primary food preparation model from the options in a drop-down list: cook fresh, cook chill, or cook freeze. This will help the Aged Care Quality and Safety Commission to identify residents may be at nutritional risk. Next slide, please. The catering categories have also changed from the previous BDF reporting. The different types of catering that are reported under these sections are internal catering. This relates to instances where all meal preparation is done on site by the organisation. Contract catering internal, for example, central kitchen for multiple facilities, where the food is prepared off-site by the approved provider with an internal contract arrangement between the aged care service and the approved provider. And finally, contract catering external. An example of this is on-site kitchen with contract kitchen staff and management. And this is where food is prepared on-site by an external provider. For each of these types of catering, we want the food cost split by whether the food is fresh or not, and the hours involved for cooks and chefs, and also for food service and food management. And I'll go into more detail on this for you in a minute. Finally, there are two further rows below those for food and cooking ingredients. The first one seeks the hours for cooks and chef, which covers labour paid hours for cooks and chefs in total for the quarter. The last line in the section relates to the hours for food service and food management, which covers labour paid hours for food service and food management staff in total for the quarter. Next slide, please. Oh no, sorry, back one, please. Another change is under the QFR food and cooking ingredient costs, which will need to be separated by whether they are fresh or not. This delineation is simply identified by the GST classification. Using the GST classification ensures consistent reporting between services, and given it is in common use in purchasing arrangement, this split is intended to avoid confusion. Again, this information, together with the data we will collect on food preparation model, will be used to identify where residents may be at nutritional risk. So why are we asking these questions? The research demonstrates that freshly prepared food is generally more nutritious and more flavourful and has a high chance of being consumed, particularly in the residential care cohort of frail elderly, where their taste sensations may be muted or changed. Food which isn't consumed simply cannot help to improve the nutritional status of a person. So food has to be delicious as well as nutritious. Greater scrutiny will be applied to services using minimal fresh ingredients and using food preparation methods other than cooked fresh in order to ensure positive consumer outcomes. In addition, we have heard from older Australians that they want to be informed about the use of fresh and pre-prepared or processed food in residential aged care in selecting a residential aged care facility. So subject to government decisions, it's possible that this information may be published in the future. Next slide, please. The final two catering categories are provided for instances where the labour cannot be separated out. These are third-party external kitchens, where the cost of the entire contract for food is prepared off-site by an external provider. This does not include food service of delivering food to residents, only the cooking. And also there's another category which is called other, which includes any contract type which does not fit into the above, such as those instances where you may buy in takeaway. Next slide, please. Some additional notes that you should also find helpful for completing food and nutrition tab in the QFR are food costs don't need to all be included under only one category and can be split between categories. For example, a provider may have multiple outlets which receive meals from an external kitchen run by their own organisation. In this case, the meal costs would come under contract catering internal, but their food service and food management hours would come under internal catering, as each individual services food management staff would collect and serve the food. As per the BDF, food service and food management hours does not include time spent on personal care minutes. This is recorded elsewhere in the QFR. For those of you with multiple services, we have streamlined the reporting arrangements so that you can complete the reporting for all services together in one report, unlike that in which we had under the BDF. While a submission does still need to be made for each service, you're able to complete them all in one place, and this will make it easier for larger providers to report for all their services. Closer to the first reporting deadline, the department will be releasing explanatory notes for completing the food and nutrition tab in a similar format to the BDF supplement notes. These will be uploaded to the department's website. Please look out for the department announcements for when these will be released. Next slide, please. Thank you for listening. This brings me to the end of my presentation, and hopefully I've done that quick enough for you, Jess. I hope you found it informative, and if we have time, I'm happy to take any questions.
Thanks so much, Kate. Tim, I'll just flick to the next slide, which just has where information can be found. I wanted to just tell people, and then I will go back to some of the questions. So Grant, you are on notice. Really quickly, everyone, we will be doing further webinars. We'll make sure we have sufficient time to cover particularly the care minutes, because that's where the most of questions are coming from. The website is up there, health.formsadministration.com. That has the financial report, the definitions, it has a guide, and that's where we'll be putting our frequently asked questions. And we'll also be sending out the link to the portal shortly. And we will have a help desk available, and that will be communicated once the portal is open. And in the meantime, the email inbox is up there to ask any questions. These slides will be made available. Okay, Grant, in our last 5 minutes, I've tried to bring together some of the questions that are common. So question 1, can you talk to care management staff, how they are to be recorded if a registered nurse is providing the care management or acting as a care manager? And the second part is, does care management staff include CEOs and those type of things?
Yeah, I'll answer the second question first. No, it doesn't include CEOs. Another area, you've normally got an area called corporate or administration. For the care manager, it's always going to be a bit of a when I say grey area, when it's a registered nurse, as an example, performing a number of functions. I said before, I think the first line is make certain your job description for that particular role clearly delineates the functions they've got. And then really from there, it's a matter of then saying, really, how much have they interfaced with a resident? So what percentage of the time are they having a direct interface with a resident, or assisting a resident, or assisting one of the nursing staff on doing it? So I think that what I remind people that we've already got certain data from last year's aged care financial report, so we don't want to suddenly see all care management going into registered nurse category. There always will be a component of care management that's required. Normally it's a facility manager, not the CEO, but really have as your basis that their job description shows what they are and what percentages are normal, and make certain you make that allocation similar to what you would regard the job description or the normal course of the operation.
Thanks, Grant. Excellent. Next question is, there's quite a few questions around what constitutes non-hours worked. If you are able to kind of describe what non-worked hours, on how providers should interpret non-worked hours.
Look, I guess it's a matter of what it's saying. It's almost like the balance. In other words, you've allocated your hours from the roster, and that gives by the various categories. And then you've looked at your total hours that have been worked. It's almost the balance of what hours haven't been allocated. So from worked hours, remember this is all to do with worked hours, not paid hours. And it's really the balance of what hasn't been allocated somewhere else that's going there. So non-worked hours is a slightly interesting terminology, but it's basically hours that haven't been allocated to one of the direct areas classifications before.
Thanks, Grant. I think you did touch on this, but there were a few questions, so it's worth clarifying. Questions around, I suppose it goes to the base pay versus how to treat casual loadings, penalty payments, superannuation in the recording of labour costs.
Right. Well, again, I think you're quite right. There's going to be a lot of components of the labour costs. So it's a matter of putting in, I guess, the costs of employment. So therefore, if there, as you say, if there's termination in there, or there are additional costs, fringe benefits, or you might pay the fringe benefits tax, what's the cost of directly cost of employing that staff? So this is, in an accounting sense, saying what's the cost of employment, what are all the components of employing each member of staff, and that could be their leave entitlements, there could be superannuation, obviously workers' compensation, those sorts of areas, the cost of employment. So that's your overall cost of employing them, but exclude, again, the associated costs, which could be payroll tax, workers' compensation premiums, and any staff training or area where that's not the cost of employing that particular staff member.
Wonderful. All right. We've just hit 12:30, so I imagine people will need to go. So we will work through these questions, publish responses to the questions that we were unable to get to, and also the questions that we did answer. Stay tuned for further webinar, which will really cover this and any other questions that we're receiving in the meantime. A really big thank you to everyone for allocating 90 minutes today, and for my colleagues on the line, Nikki, Kate and Grant, thank you so much for joining us today to talk through the detail. Very much appreciated, and I hope people found this useful in the preparation for the quarterly report. Thank you, everyone, and enjoy the rest of your Thursday.
Thank you, everyone.
Bye.